Today, I will present our business report for the fiscal year ended March 31, 2025. Guided by our corporate philosophy, which is to contribute to realizing a clean environment and a sophisticated global society, the TPR Group has achieved sustainable growth by building a production and sales network across 6 major regions worldwide. Our operations are divided into 2 main businesses. The first is the Powertrain Business, which covers a range of high-performance engine components. The second is the Frontier Business, which focuses on 5 domains that we have identified as future growth areas. The automotive industry has reached a turning point. As the shift to next-generation mobility accelerates, the industry is undergoing a multifaceted transformation. Opinions still vary on how quickly EV adoption will advance. We believe engine demand will continue for the foreseeable future, but we also expect a steady increase in EVs over time. We therefore intend to address both of these trends. I will now present our consolidated financial results for the fiscal year, which ended in March 31, 2025. During the year, the global economy showed signs of recovery as inflation eased, but uncertainty persisted, mainly due to concerns over U.S. tariff policy. The Japanese economy remained sluggish overall, despite some signs of recovery supported by improvements in household income. In the automotive industry, our main business area, sales in China increased, driven by the government's car replacement support program. In Japan, however, production declined due to the impact of certification irregularities. In numbers, net sales fell 0.7% to 192.4 billion yen, while operating profit dropped 10.5% to 11.2 billion yen. Ordinary profit was down 1.7% to 15.7 billion yen. Profit attributable to the owners of the parent company rose 8.2% to 8.8 billion yen, boosted by gains from the sale of investment securities. By segment, strong performance in Asia, including China, lifted sales by 5.4 billion yen and profit by 0.7 billion yen. In contrast, in Japan, sales fell 3.5 billion yen and profit declined 1.6 billion yen. At the Faltech Group, sales declined 2.8 billion yen due to lower production on the customer side. However, profits held steady thanks to production rationalization and better price optimization. The strong performance of our Asia segment reflects TPR's response to structural changes in the Chinese market. The graph on the left side shows the passenger car market share in China. In 2017, Chinese automakers had a 38% share of the market. By 2024, their share had expanded significantly to 63%. As you can see, the share of Chinese automakers has risen sharply, bringing about a major shift in the market structure. The graph on the right shows the change in the sales mix in TPR's China operations. In 2017, sales to Chinese automakers accounted for 43% of total sales. By 2024, that share had grown to 65%. This reflects our early response to Chinese automakers and demonstrates that we are keeping pace with structural changes in the Chinese market. As a result, while some Japanese suppliers have struggled to adapt to changes in the Chinese market, TPR has successfully maintained and expanded sales by strengthening relationships with local Chinese manufacturers. I will now turn to our approach to shareholder returns. We paid an annual dividend of 100 yen per share, up 30 yen from the previous fiscal year. Taking into account performance and future growth investments, we will continue aiming to provide stable dividends and steady shareholder returns that meet expectations. Next, I will now explain our shareholder benefit plan. We have established a preferential long-term shareholder program to thank shareholders for their ongoing support and to encourage medium to long-term ownership of our shares. Shareholders who hold our stock long-term receive additional rice coupons. I will now report on the progress of our 2026 Medium-Term Management Plan. This is the core policy of our 2026 Medium-Term Management Plan. In the powertrain business, we will leverage our accumulated strengths to maximize profits. In the frontier business, we will actively invest resources in commercialization and expansion. Through these efforts, we will advance sustainability initiatives to achieve lasting growth and enhance corporate value. Let me also update you on the progress of our initiatives. As part of our efforts to improve capital efficiency, we sold 4 cross-shareholdings totaling 2.2 billion yen, with the aim of reducing low-return assets. We also introduced a cash management system to make more effective use of funds within the group, improving efficiency by the equivalent of 4.0 billion yen. To enhance shareholder returns, we repurchased 1.5 billion yen of our own shares, funded by the sale of cross-shareholdings. We also increased the annual dividend by 30 yen. As part of efforts to strengthen IR, we expanded dialogue with shareholders and investors, increasing meetings from 29 in fiscal year 2023 to 43 in fiscal year 2024. We are also enhancing our information disclosure. Next, I will outline our business strategy. In the powertrain business, we are building our capacity to capture market growth in response to expanding customer production in India. Leveraging our track record with Japanese and Korean automakers, who account for over half the Indian market, we aim to expand our part sales in step with their growth strategies. We are also making active capital investments, adding a new high-efficiency line to boost production capacity. Looking ahead, we will continue to monitor growth markets closely and make the necessary investments, including considering the establishment of a new plant. In the frontier business, sales of EV-related products have been growing steadily since 2023. With China's new energy vehicle market expected to keep growing, we will work to capture medium to long-term demand. At present, more top players in the Chinese EV market are adopting our products, and we are adding new production lines to keep up with strong demand. To further expand our 5 frontier domains, we have established the Frontier Innovation Center in Harumi, in Chuoku, in Tokyo. By bringing together resources in our frontier business and linking marketing, R&D, and business planning in a co-creation framework, we are accelerating commercialization. We are also working to recruit specialized talent for the future and to promote open innovation through partnerships with universities, startups, and industry. Finally, I will share details of our sustainability initiatives. Because we believe that people are the most important foundation of management, the TPR Group launched a human capital management initiative based on 4 key themes. We are accelerating our efforts in this area. As part of our workplace improvement efforts, we were certified as an outstanding health and productivity management organization. We will continue to foster the growth of our people, helping them contribute to both the company and society. TPR has built its presence through technologies that address sliding, friction, and heat, as well as through proactive proposals and joint development. Leveraging these strengths, we aim to create a society in which both people and our employees can thrive. And by mastering the movement of people, products, and minds, we will continue to support a beautiful and prosperous global society.